As we approach the end of 2023, the question on everyone's lips is, will Bitcoin experience a golden period in 2024, or will it succumb to a power crisis? Thailand's largest digital asset exchange, BitCub Capital Group Holdings, predicts a bullish run for Bitcoin in the upcoming year. The company's CEO anticipates 2024 and 2025 to be profitable years for the broader cryptocurrency market. What sparks this optimism? The halving process. Bitcoin undergoes a halving every 4 years, wherein the reward for mining is slashed in half. This event not only limits the total number of Bitcoins to 21 million, but is also believed by some to hike prices. However, this golden period is not expected to be smooth sailing. The CEO anticipates a period of corrections and volatility during the halving process. With 90% of Bitcoins already mined and in the market, the remaining 10% is predicted to be fully available by 2140. But it's not just the price volatility that's a cause for concern. Bitcoin's energy consumption is another critical issue that needs to be addressed. Research suggests that if unchecked, the energy consumption associated with Bitcoin mining could reach an annual rate of 297 terawatt-hours by 2024, exceeding the electricity consumed by Italy in 2019. The decentralized nature of Bitcoin mining, which relies on a network of computers solving complex puzzles, has led to the establishment of mining farms that consume significant amounts of energy. China, which currently accounts for over 75% of the Bitcoin network's hashing power, is a testament to this fact. If these concerns are not addressed, it could hinder China's efforts to meet its carbon emissions targets and have a negative impact on the global environment. Whether Bitcoin is heading towards a golden period or a power crisis, it's clear that the cryptocurrency will be at the center of many conversations in 2024. The possibility of a spot Bitcoin exchange traded fund, or ETF, has been generating quite a buzz. Indeed, it's a topic that's been dominating the cryptocurrency conversation lately. But what's all the fuss about, really? Well, it all started with the recent surge in Bitcoin's price. That spike wasn't just a random occurrence. It was driven by a wave of optimism surrounding a potential spot Bitcoin ETF. You see, a Bitcoin ETF would mean a significant step toward mainstream acceptance and could potentially open the floodgates for institutional investors. But of course, with every high, there's often a low. In this case, it was a false tweet. The tweet claimed that the SEC, the Securities and Exchange Commission, had approved BlackRock's spot Bitcoin ETF application. You can imagine the excitement that rippled through the crypto world. But alas, it was not true. Yet, even though it was a false alarm, it triggered a notable 10% price jump for Bitcoin. Despite the roller coaster of emotions, the crypto community remains hopeful. Major players have entered the arena, including the likes of BlackRock and Fidelity. Their presence has only fueled optimism for a spot Bitcoin ETF. Even Mike Novogratz, the CEO of Galaxy Digital, expects an approval before 2024. His prediction is based on the growing number of requests for the product. On another note, the interest isn't just confined to the crypto world. Google Trends indicates a surge in search interest for spot Bitcoin ETF, reflecting a growing mainstream curiosity. This shift in attention could be a sign of the times, a signal that cryptocurrencies are inching closer to becoming a part of the everyday financial conversation. As we wait for the SEC's decision on the spot Bitcoin ETF applications, it's clear that the cryptocurrency market is on the edge of its seat. The anticipation is palpable, and all eyes are on the SEC. Whether it's hope or hype, only time will tell. But one thing is for sure, the Bitcoin buzz is far from over. Bitcoin mining is another aspect of the cryptocurrency that's been making headlines. As we delve deeper into the world of Bitcoin, we find ourselves in the throes of its mining process. With a staggering 90% of Bitcoins already in circulation, the market is brimming with activity and anticipation. It's fascinating to note that Bitcoin operates on a halving mechanism. This essentially means that the reward for mining Bitcoin is reduced by half approximately every 4 years. This mechanism was designed to control the supply of Bitcoins, capping it at a finite 21 million. Currently, we're in the countdown to the next Bitcoin halving, anticipated to occur in April 2024. Now you may be wondering, what does this Bitcoin halving mean for the average Joe or Jane? Well, it's all about supply and demand. As the reward for mining decreases, the number of new Bitcoins entering the market also drops. This reduction in supply, if met with steady or increasing demand, could potentially drive up the price of Bitcoin. But let's not forget, the cryptocurrency market is a volatile beast, teeming with unpredictability. While some experts believe that the halving event could spark a bull run, others warn of possible price corrections and increased volatility during the halving process. Adding to the complexity, we have the environmental impact of Bitcoin mining. Research suggests that if left unchecked, the energy consumption associated with Bitcoin mining could exceed that of entire nations by 2024. This has led to calls for stricter regulations and innovative solutions to mitigate Bitcoin's carbon footprint. So, as we inch closer to the next Bitcoin halving, one thing is certain: the landscape of Bitcoin mining is set for some significant shifts. Whether these changes will ignite a golden period for Bitcoin or usher in a new era of challenges, only time will tell. With the next Bitcoin halving on the horizon, the world of Bitcoin mining is bound to experience some significant changes. 2023 has seen the emergence of Bitcoin NFTs, introducing a new level of excitement and innovation into the Bitcoin ecosystem. The end of the year brought about a significant resurgence in activity, particularly in November. But what was the spark that ignited this resurgence? Well, it seems that the Bitcoin NFT scene was given a shot in the arm by the introduction of the Ordinals protocol and Bitcoin NFTs. These developments have added a new layer of complexity and potential to the Bitcoin world, opening up fresh avenues for creativity and investment. And the market has responded with enthusiasm. In fact, the last quarter of 2023 saw the supply of stablecoins turn positive, indicating potential buying pressure in the crypto market. This was reflected in the remarkable revival of NFT trading volumes, which had seen a significant downturn throughout the year. Suddenly, Bitcoin NFTs became the most popular type, suggesting a shift in market sentiment and a revitalization of the NFT scene. This surge in NFT trading volumes is a clear sign of positive market sentiment. It suggests that traders and investors are not just interested in Bitcoin as a store of value or a medium of exchange. They are also intrigued by the possibilities offered by Bitcoin NFTs, seeing them as an exciting new frontier in the digital asset space. So, what does this mean for the future? Well, if the current trends continue, we can expect Bitcoin NFTs to play a significant role in the Bitcoin ecosystem in 2024 and beyond. They have the potential to open up new opportunities for artists, collectors, and investors, transforming the way we think about digital assets. In conclusion, the resurgence in the Bitcoin NFT scene is not just a passing fad, it's a sign of a maturing market, one that is becoming more diverse and sophisticated. It seems that Bitcoin NFTs are here to stay, adding a new dimension to the ever-evolving world of Bitcoin. As we look towards 2024, the future of Bitcoin seems both promising and challenging. With a predicted bull run on the horizon, enthusiasts are betting on a golden period for Bitcoin. Thailand's largest digital asset exchange foresees a profitable time for the broader cryptocurrency market in 2024 and 2025, though it does anticipate a period of corrections and volatility during the halving process. However, this potential prosperity doesn't come without its concerns. The energy consumption associated with Bitcoin mining is predicted to skyrocket, potentially surpassing the energy use of entire countries. This raises questions about sustainability and the environmental impact of Bitcoin's growth. It's a complex issue that will require innovative solutions and careful regulation. Meanwhile, hope is growing for the approval of a spot Bitcoin ETF, with major players like BlackRock and Fidelity entering the fray. This could open up new opportunities and bring a fresh wave of mainstream interest to the world of Bitcoin. In terms of Bitcoin mining, the next halving is expected in April 2024. This event, which reduces the reward for mining Bitcoin by 50%, could potentially trigger the predicted bull run and shake up the market. Finally, we have the exciting emergence of Bitcoin NFTs. This new development has reinvigorated the Bitcoin ecosystem and could be a game changer for the future of digital art and collectibles. No matter what 2024 holds for Bitcoin, one thing is clear: the cryptocurrency will continue to make waves and shape the future of finance.